Good morning, everybody, and this is your S&P 500 day trade setups for today. So we are back in this zone that we've had in the past. We have made a new high above. Sorry, let's just get this level correct, which is 39.52, 39.50, and we know where we're heading. We battled with this area all of. Well, not all, but a lot of the time last year, and that is 4,000. So you can see there was always a lot of price action at 4,000, and that is something which we are looking at the moment. So from a weekly perspective, I think, sorry, I've got a lot of noise here. Let me just get rid of the noise. Play. Okay, so from the weekly perspective, we have been making a series of lower highs here, and we have been making lower lows. So technically, we've been in a downward trend. Now we did get this big rejection weekly bar here, but then immediately got a tweezer bottom off the 155 EMA here. So far as I'm concerned, we are looking for a break higher, and my chart is battling this morning. Okay, so we're looking for a weekly break higher above 4,150 for this downward trend to have broken. So that's the first thing that you need to pay attention to. We also need to cross over the moving averages here. So for now, we are just basically mucking around, going sideways here, trying to pick a direction on which way we're going to go. But when you start looking at the lower time frames, and you start with the 8 hour, you can see we are getting a crossover at the moment on the 8 hour. It's not there yet, so we need to wait for it. We need to make sure we've got some kind of a retest before we can have any confidence that we do have a crossover and we have a potential move to the upside. Bear in mind what happened here. We got the crossover, started a rally, then just went sideways and fizzled out, and we're in the same zone here. So every time we've had CPI data, I'll do this on the weekly as well. So every time you've had CPI data, you can basically pinpoint them like that. Okay, so CPI data's come out, you've just seen us plummet. So that is the key catalyst that we're waiting for, and that is coming out tomorrow. So we do have earnings season kicking off tomorrow as well. The banks are coming out. If you look at what's happening on the Dow Jones, obviously some people know something we don't, and they're in a couple of trades earlier, which is driving the market higher. So for me right now, we do have a confirmation of a reversal in the trend. The trend was down. We've broken up, we've come back, we've tested it, and now we've rallied a bit. It's been really messy, but first level that I'm paying attention to right now is 39.52. Pull back into that should give us an opportunity to buy. Oscillators are extended at the moment, so you don't really want to commit too much to this, and even on the hour you can see extremely overbought right now. So we're waiting for pullbacks onto structure. We're far from the moving averages as well, so it's not something that I really want to get involved in right now. I want to see a pullback. I want to see some kind of a structure here, and you can see what I'm talking about here. You get a pin bar, you get an engulfing bar. Pin bar's not off a level, but there would have been a lot of people that would have been trading at pin bar. Short there, stop up there, and look what happens once the stop gets triggered. Boom, 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 boom. Anyway, I'm waiting for pullback. I don't think you don't want to be long up here. Definitely don't want to be short. There's no reason to be short at the moment. This trend is solid. We dropped below the low of Tuesday. That starts changing the tune. So that starts looking at a reversal in the trend. I do want to see these oscillators ease off though. So what we're going to do is we're just going to pop down the 15-minute, because you should see the oscillators ease off on the 15-minute chart. Now, there is a little bit of structure here. It is actually a zone. So it's 39.59 and 39.52. So this area around between 39.60 and 39.50 is what you're looking for. You're looking for price to get back in here for a move to the upside. But by the looks of things, you zoom into that, it is looking like we're going sideways. Should see the oscillators ease off on the lower time frames, and then we're looking for a break of that structure for a move to 4,000. So that is the other way of looking at this, is if we do get a break above the high of yesterday, which is up there, I want to see a break, I want to see a retest. It will give me the other opportunity to get in long. That's 39.74. So that's two setups for longs this morning. Just remember, you do have data coming out today as well. And anything can happen. So this could be sort of building a nice trap for us as retail traders. In other words, you get suckered into this thinking, it's going up, I'm going to make lots of money, let me bet the farm on this, and then what happens is the retail traders take it, turn it around and drive it down. So be very wary of that. So for me, pull back, wait for the price action, pin bars, inside bars, engulfing bars. Take the trade on the break of the price action, put your stop right below that price action, and pick your targets. Don't be greedy. 100 points pays the bills as far as I'm concerned. So if you've got a trade in that generates you 100 points profit, bills are paid. Anything more than that is fat and cream, and that's what you're always looking for, but it's not always practical. Okay, anyway, that's it for me. Hope it helps, and we will catch up with you tomorrow morning. Cheers for now.